I just got paid.
Hey, bro, let me see that.
What?
Let me see that real quick.
This?
Yeah.
Okay. What are you doing?
Here, bro.
What?
Here.
What's this?
Oh, that's just your taxes, bro.
What? How to avoid paying taxes legally. This is tax avoidance and not tax evasion, which is illegal. So you don't want to end up like Al Capone. Now imagine one day you're hungry, you save up some money, and you go to Subway to get a foot-long sandwich. And when you unwrap your sandwich after you build it up, you choose all your toppings, your lettuce, your favorite meats, you put it all together, you sit down to eat it, and as you unwrap it, before you get to bite it, this guy named Uncle Sam walks by, bites 30% of your sandwich, and you're left with 70%. That's what taxes is. Taxes are the fuel that you pay to Uncle Sam so that he can obviously build the roads, schools, and wherever else the state and federal governments decide to spend their money. Stimulus bills as well. Hopefully another one gets passed soon for those waiting for that second stimulus check. There's no updates on that. But we're talking about avoiding taxes legally today. If you're new to the channel, my name is Zach. Welcome. Make sure you hit that red subscription button and tap the notification bell so you know when the next video comes out. Drop a like if you enjoy videos like these because I make all kinds of content that help you make more money. And if you're not new, welcome back. I appreciate every single one of you. Drop a comment down below. I respond to every single comment. I heart every comment, at least within the first day or two. So I try to get back to all of you. Without any more introduction, let's get right into these 5 legal loopholes that you can implement starting today to help you save on taxes. Probably one of the most important videos you'll ever watch on taxes today. So number 1 is a Roth IRA. Now, I've already talked about this in several videos, but I'll address it again here. A Roth IRA is a tax sheltered account. Don't fall asleep. Don't get bored. This is very important for you to know. This is all you really need to know. Every year, you, me, Bill Gates, whoever, can only put in $6,000 a year according to the law now in 2020. Might change in 2021 right around the corner. But as of right now, $6,000 a year is the most you can contribute to this. Why is it limited? Because of the benefits it has. Once you put money in a Roth IRA and you invest in that account, you buy stocks, you buy REITs, you buy bonds, whatever you like to invest in, that money grows tax-free. As that money compounds, as your investments grow, when you sell off an investment within a Roth IRA, you pay 0 in taxes. When you collect dividends in a Roth IRA, you pay 0 in taxes. This is why I hold my real estate investment trusts within a Roth IRA. That way I don't get taxed on those dividends like I would in a regular taxable, let's say a Robinhood account. So if you don't have a Roth IRA, open one up ASAP. I can't recommend it enough to every single person. I think everyone should have a Roth IRA. Very important. Number 2, the second legal loophole is a 401k, similar to a Roth IRA, but totally different. Let me explain. It's also a tax sheltered account. However, in this account, you reduce your taxable income. So if you have a job and you make $100K a year, legally right now you can reduce $19,000 out of your $100K yearly income. So that's $81,000 of income that actually gets taxed. That $19,000 doesn't get taxed. It goes into your 401k. Now in your 401k, the money compounds, grows. You might get capital gains and dividends in there, but you don't pay taxes on that until you retire at 65 or whatever age you decide to retire. That's when you have to pay taxes on it. I like the Roth IRA more and I recommend it for everyone, but if you have a job that offers a dollar for dollar match, I strongly recommend opening up a 401k as well because that's already doubling your money. So who cares if it gets taxed later down the line? You already doubled your investment just by going with your employer's dollar for dollar match. Now the downside of the 401k is that 10, 20, 30, 40 years from now, you don't know what the tax laws will be. You don't know if taxes are going to be much higher than they are today. And I would predict that taxes will definitely be more than they are today. With more stimulus being printed out, more things going on in the world, taxes are only going to get higher. So I prefer the Roth IRA. But like I said, if there's a dollar for dollar match, open up the 401k. And if you're self-employed, there's also self-employed 401ks. Look into those, but you don't get that one-for-one match. The third legal loophole, which I think you all need to take advantage of when you get to this point in your life, is in real estate, a 1031 exchange. Whenever you buy a home, an apartment, a condo, later down the line when you decide to sell it, instead of paying taxes on all those capital gains when you sell it, because you're taking out cash. You don't take out cash, and instead you defer those capital gain taxes by buying another property, using the money from the first property and putting it into your next property. This is a 1031 exchange. Very simple to do. You can keep deferring your taxes until the day you die. So from now till whenever you're done buying real estate and investing in more and more property, you can essentially pay zero in taxes through real estate. This is why so many people, especially wealthy people, love real estate, because of the tax benefits, the 1031 exchange. The fourth legal loophole is an HSA, health savings account. If you qualify for this, you can deposit up to $3,500 per year tax free. Just like that 401k, from your taxable income, you can remove $3,500, put it in the savings account, and this savings account is built to pay for any medical expenses, co-pays, deductions, anything involving your medical life. You save it. Now let's say you don't need it, you don't have a medical emergency, it just rolls over to the next year. So you can do this every single year, $3,500 tax-free in a savings account. Let it stack up there, and the day you do have a medical emergency, hopefully you don't, you can use that. The fifth and probably the best legal loophole I can tell any of you, and this differs from person to person, is hiring a good CPA. Especially if you have your own business, consult with a CPA, because everyone has a different situation. Everyone has a different type of business. Some people are better off not even having an LLC and just running as sole proprietors because of the type of business they're in. They're not at risk for their own personal assets. They don't need to put that legal shield up, and maybe it's not worth it for them to pay the cost of an LLC. Otherwise, if you have an LLC, maybe you want to file taxes as an S Corp, C Corp, you don't know which way to go, hire a good CPA. They'll walk you through all the tax implications, advantages, disadvantages of each method. And it doesn't hurt to pay a CPA a little bit of money to save you a lot of money. This is probably the best return on investment. You'll more than double your money than what you pay any CPA. Obviously, let me take that back. Not any CPA. Look up a 5-star, do your research. A good CPA in your area. A good CPA is priceless. So if this video helps save you $1 in taxes, please be sure to drop a like on this video. Share this with someone that doesn't like paying taxes, and watch one of these two videos. That'll be on personal finance or investing, helping you make more money. I'll see you in one of these two videos, and until one of these, click on them. I'll see you then.